US President Donald Trump dials Prime Minister Narendra Modi on the occasion of Diwali and discusses trade and efforts to end the Russia-Ukraine war, with PM Modi reportedly committing to cutting back the purchase of Russian oil. Sources say both sides have positive negotiations on a proposed trade deal. Stocks on Wall Street end Wednesday's trading session lower on the back of a new US-China trade tension. Dow slips more than 300 points, Nasdaq sheds more than 210 points. Asian markets mirror Wall Street losses largely on open trade on the back of its opening. When you look at it in terms of red on the US as well as China trade concerns, the GIFT Nifty is indicating a gap-up start for the Indian market. Crude oil prices extend gains amid the US imposing new Ukraine-related sanctions on Russia, targeting oil companies like Rosneft and Lukoil. Gold prices slip on investors' book profits after a week-long rally ahead of key US inflation data due this week. The metal sector is now more than 6% of its highs. And in key earnings that we're keeping an eye out on, FMCG major HUL will report its September quarter numbers. The company's profits and margins are expected to take a hit amid GSE transition and weak demand, while revenue may see a slight uptick. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Firstly, a happy new year to all our viewers. And seems like that cheer for Diwali seems to be continuing today on the D Street as well. Let's look at the Asian markets first, because Asian markets are muted. They're seeing a bit of a red coming in on the screen. Look at the Hang Seng Taiwan index. That's down in today's trading session. Even when you look at the Australian index, ASX 200, that's also muted, down 0.1% right now. We have Shanghai that's trading with cuts of almost 0.5%. Nikkei trading with cuts of more than 1%. Now, obviously, there are some US-China trade talks that are going on. There's some tension that's coming in on that front. Asian markets are mirroring the losses of Wall Street. But Indian markets, that's a different story, right? Nifty implied open, let's pull that up. Look at the gap up stuff that we're keeping an eye on. Almost 400 points uptick in terms of Nifty implied open. So let's keep an eye out on that. That means we'll be at an all-time high level today. So that is something that we're watching out for. Hope the D Street cheer continues that we saw coming in for Diwali even in this year as well. So that will be exciting, that we'll be keeping an eye out on. But as of now, a gap up opening for the Indian markets is what we're watching out for. But like I was saying, a lot of global market action that we've seen coming in overnight and the last couple of days as well. We have a team of research joining us to set us up for trade, important stocks to watch out for, as well as what is going to be happening in the world of F&O. We'll take you all through all of that with our team of research. First up, let's go across to Vivek, who's here to tell us the important market cues that we're watching out for today. Good morning, Vivek.
Good morning. Like you mentioned at the start of the show, Nifty all said most likely to go ahead and hit the all-time high level. Remember, last week we've already seen the Nifty Bank go ahead and touch its record high level, and the GIFT Nifty is indicating a very strong gap-up start for the Indian markets today. Remember, we are coming after almost a 2-day break. You did see more trading, but that was a very low volume trading session as far as markets were concerned. What are the key cues and why is the market opening or seeing such a strong gap-up opening? Number one, the Trump-Modi conversation that's happened over the last 2 sessions raised hope of actually going ahead and easing tariff woes as far as Indian equities and Indian corporates are concerned. Now, when you're talking about the key results today, keep an eye out on HUL, Hindustan Unilever, Colgate-Palmolive, as well as Laurus Labs. All of them will come out with their results today. The commodities here, remember, we've been talking about gold and silver being at record high. Gold almost 8-9% off recent highs. So both the commodities as well as commodity-linked stocks or gold financing companies could come under a bit of pressure today. Oil prices, however, on the other hand, ended almost 3% higher on Wednesday. USA has gone ahead and imposed further sanctions on key Russian oil companies. Now, US markets, a bit of mixed cues, ended lower on Wednesday, but you actually saw quite a bit of positive momentum prior to that. And like you mentioned, Asian markets indicating a soft start, but the GIFT Nifty indicating a very strong gap-up start for our markets.
Okay, thank you so much for that, Vivek. But time to go across to Upasna, who's here to tell us which are the important stocks that we should be keeping on our radar. Good morning, Upasna.
Good morning, Vinny. First up, let me start with United Breweries. Now, Heineken has given its Q3 update on India operations. It says that the India organic net revenue grew mid-single digits and beer volume fell due to monsoon. But the premium brands like Kingfisher and Ultramax have performed well and grew relatively. Next up is Dr. Reddy's. The company has received the Establishment Inspection Report from US FDA for its FTO11 formulation plant in Andhra Pradesh. Next up is Torrent Pharma. The CCI has granted approval to acquire controlling stake in JB Chemical and Pharma from KKR. NMDC also in focus as there is a revision in iron ore pricing effective from 22nd October 2025. Lump prices down by 550 rupees per ton and fines down by 500 per ton. PNB Bank also in focus as it has divested its stake in Canara HSBC Life Insurance Company from 23% to 13% through an OFS in initial public offer. BEL also in focus on the back of order win. The company has received orders worth 633 crores from Cochin Shipyard. And lastly, Geojit Financial in focus on the back of the Q2 results. Net profit down 59% on a YoY basis and revenues also down 22%. So all in all, we'll be closely watching out for all these stocks today.
Okay, Upasana, thank you so much for that. But let's go across to Sudarshan, who's going to tell us what are the important cues in the world of F&O that we should keep an eye out on. Good morning, Sudarshan. Gap up start, but important cues that we should keep an eye out on.
Good morning, Vinny. So 26277.35, that's the level that we'll be watching out for today because as far as GIFT Nifty goes, it's indicating a start with a gain of almost 400 points. And if it happens, we are set for a record high for Nifty 50. Now, if you talk about the cues are looking largely positive and we'll be reacting to the data of 3 days. Remember, on Monday, we had done the trading session. After that, we had more trading day. Just the trading session was for 1 hour. So all the data that I'll be talking about today, it will be from Monday. So firstly, all the major indices on Monday also had seen a big gain led by all the auto names. Even banking stocks had seen largely positive trading session. And today the focus would be on Nifty and Nifty Bank continues to hit the record high. Now on the cash flows, we continue to see buying both from FIs and DIs. On Monday also we saw FIs buying nearly 800 crore. DIs have gone ahead, bought almost 2,500 crore. In the index futures too, FIs have bought 1,000 crore and now their long exposure has increased to 19%. And now the short covering phase is gone. Now they're adding or taking fresh positions. On Monday also we have seen FIs adding more than 5,400 long contracts. And in front of that, short addition was just 244. And major activities in the options data front we have seen in 26,200 and 26,100 call. 26,200 call, we have seen addition of almost 28 lakh shares in the open interest with premium rising further higher. On the put side, 25,700 and 25,900 were very active. So support for Nifty would be now around 25,800. First resistance would be 26,135. But in all probability, we are going to open higher to that level. So next resistance comes around the record high of that is 26,277. For Nifty Bank, support would be 57,800. That would be Monday's intraday low, and resistance would be 58,200. One stock that remains in the band is Saman Capital. Apart from this, I'll keep an eye on 2 stocks. Indus Towers is seeing fresh longs, and one stock that is seeing fresh shorts is Dixon Technologies.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on the level you mentioned as well, 26,277, if I'm not wrong, right?
Correct.
So we'll keep an eye out on that number over there for the Nifty all-time high levels. Let's keep an eye out on that. But let's move on, and as we slip into the break, let's listen into some opinion that came in from top market experts on sectors, themes that they are betting on in this new Samat. Listen in.
The last 4 years have been led by the public sector stocks. And we continue to be bullish on that sector because what has happened for the first time after many, many years is that rather than private enterprise leading the sector up, it's government-owned capitalism, whether it's in America with Donald Trump directing investment, whether it's in China or whether it's in Japan. I think the government's capex is now leading edge of the boom in India. We are finding opportunities, say, in the shipbuilding sector, where the government has made a very loud noises that India should be building more ships. That means capex, and that means a great boom ahead for the Indian shipbuilding industry. I think there's a lot of clamor for rare earths now in the world. Everyone has realized the importance of rare earths. So my feeling is that the government is going to direct a lot of capex in some PSUs to explore and process rare earths.
I feel insurance is another very important thing. I think after GST, the kind of impact that you'll have and the kind of numbers that you have, I have a feeling insurance would play out the play. Consumer finance, again, I feel that this whole GST cut, etc. I mean, consumer finance is a very sweet spot because, you have the discretionary consumption play, hopefully reviving, fingers crossed on that. Plus you have the financial play. So I would actually play these small themes. They may not be in your large, big banks, but this would be more in the mid-cap kind of space. And I have a feeling that you could actually have some very big rocket moves out there.
We've been owning IDFC First Bank for some time, and I think clearly it looks like that. I think from the management's most recent commentary that the worst is behind for them, and clearly better days lie ahead over the next few years. They've essentially, I think, also had a fair bit of funding coming in from two big marquee global investors. So I think even from a cap raise, they seem to be sorted. It's now all about execution, execution, and execution. The other is we've been liking that is essentially a payment bank out there. Which essentially has been waiting for an approval from the RBI. The Fino payment bank. That's the second one we've been. We own Paytm as well. It's possible that they're probably today in the quick commerce side, the revenues are around 40-50,000 crores. I probably think the bull market in them will continue as long as probably they get to 3 lakh crore, 5 lakh crore in terms of revenues.
Welcome back to Power Breakfast on CNBC TV 18. Now let's move on and talk about what US President Donald Trump has made in terms of recent commentary. US President Donald Trump said that he's called Prime Minister Narendra Modi and wished him happy Diwali. Indian ambassador to the US, Mr. Vinay, also met with Trump at the Oval Office and extended his greetings to the president. Indian origin CEOs, including CEO of Adobe, Shantanu Narayan, also were present at this celebration. Addressing reports, Trump confirmed that he spoke to Prime Minister Narendra Modi and they have a very good relationship. He reiterated that India will not be buying much oil from Russia, and Prime Minister Modi wants the Ukraine war to end as much as he does. In a social media post, Prime Minister Modi said that, and I quote, "Thank you, President Trump, for your phone call and warm Diwali greetings. On this festival of lights, may our two great democracies continue to illuminate in terms of the world with hope and stand united against terrorism in all its form." End of quote. This is the fourth phone call between two leaders since President Donald Trump imposed 50% tariff on India. Let's, in fact, also listen into what a US president had to say following the phone call.
India, as you know, has told me they are stop. It's a process. You can't just stop it, but by the end of the year, they'll be down to almost nothing. That's a big thing. That was almost 40% of the oil. India, they've been great. Spoke to Prime Minister Modi yesterday. They've been absolutely great.
And amid the ongoing conversations between the US President and Prime Minister Modi, the meeting between the two leaders at the Asian Summit in Malaysia is unlikely as Prime Minister Narendra Modi will skip the summit and External Affairs Minister S. Jaishankar set to represent India. So that is something that we'll be keeping an eye out on. Now, sources also say that trade negotiations between India and the US have been on the positive side. We have Parikshit joining in with us to give us more details. Parikshit, we understand both the nations are discussing the final contours of the deal. What's the latest on that front?
Sources tell CNBC TV 18 that India and US have had positive negotiations on the proposed trade deal. Both sides are discussing the final contours of the trade agreement. India and United States are looking at an ambitious trade deal, which is a win-win for both nations. Prime Minister Modi and President Trump will have to take a final call on the trade deal. India has increased oil imports from United States by 60% year-on-year due to diversification efforts. We are in talks with the United States for an expansion of the energy partnership, but there has been no compromise on India's core interests in agriculture and dairy. While President Trump has claimed that India will stop buying Russian oil, statistics show that this may be more of a pressure tactic in the ongoing trade negotiations than a reflection of any significant policy change. According to latest data sourced from energy tracking firm Kepler, there is no visible sign of a reduction in Russian oil imports. Indian import of Russian crude is 1.8 million barrels per day in October. That's an increase of 250,000 barrels per day compared to September. Russian crude accounts for 34% of total imports and still comes with compelling discounts. Given India's balanced foreign policy stance, any blocking of Russian imports seems unlikely. According to Kepler, Indian refiners could make a token reduction of Russian oil imports by 100 to 200,000 barrels per day. Now, when we look at India's expanding energy partnership with the United States, crude imports from there in 2025 have increased to 295,000 barrels per day compared to 199,000 barrels per day in 2024. Kepler analysts have said that India has limited upside to take US crude to around 400,000 to 500,000 barrels per day. This is because US grades face higher outright transportation costs. There are also compatibility challenges with Indian refining systems. So while India will import more crude and LNG from the US to address the trade deficit, it may be very difficult to shut off Russian oil imports altogether.
Okay, Parikshit, thank you so much for that. But US has announced new sanctions targeting Russia's two largest companies, Rosneft as well as Lukoil, in an effort to pressure Moscow to negotiate a peace deal in Ukraine. We have CNBC's Iman Javers who's joining us for more details on this one.
Treasury Department just announcing significant new sanctions on Russia in a press release that was just posted. The Secretary of the Treasury is announcing sanctions on the Russian oil companies Rosneft and Lukoil. Also designated are about 30 different subsidiaries of each of those two companies. Obviously, a major escalation of the sanctions between the United States and Russia. I talked to a senior White House official about this decision a short time ago. The official said that the president leads by instinct, and the president felt it was the right time to move forward with these sanctions. Obviously, it is connected to the falling through of that meeting between Vladimir Putin and President Trump. President Trump had been looking forward to a meeting with Vladimir Putin. That meeting now has fallen through, and as a result of that, you see the U.S. side taking this action to move forward with these sanctions. The senior White House official saying that the president wants to see results in this relationship, and the president is hopeful that there can be a productive meeting between the two men at some point in the future. Not clear when that would happen. Clearly, President Trump here is frustrated with a lack of progress in coming to a peace deal between Russia and Ukraine over the war there. And this set of sanctions now is the next step up the escalation ladder as the president tries to bring some kind of control to that situation, guys.
Okay, on that note, let's also listen in to what President Donald Trump had to say on these sanctions against Russia.
Canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future. It's a very big day in terms of what we're doing. Look, these are tremendous sanctions. These are very big. Those are against their two big oil companies, and we hope that they won't be on for long. We hope that the war will be settled. We just answered having to do with the various forms of missiles and everything else that we're looking at, but we don't think that's going to be necessary. We would like to see them just take the line that has been formed over quite a long period of time and go and let's go home. Last week they had almost 8,000 soldiers killed. Many Russians were killed last week. Many Ukrainians were killed last week. We think it's ridiculous and would like to have it end.
On that note, let's also listen in to our CNBC's Mackenzie Sigalos to tell us what's happening in terms of Wall Street. How did they close? What were we keeping an eye out on?
Stocks were down across the major indexes in Wednesday trading as escalating trade tensions once again put a damper on the broader markets. The Dow lost 334, the S&P 500 fell by 36, and then that tech-heavy Nasdaq dropped 213 points. Markets moved lower Wednesday on word that the Trump administration is considering retaliating against China's rare earth export restrictions. A White House official tells CNBC the plan would cut software-powered exports to China. It's one of several options on the table, and it would make good on the president's threat last month to ban critical software exports to China on items that either have U.S. software in them or were produced using U.S. software. And General Motors announced a plan Wednesday to launch a new suite of software initiatives, including an in-car AI assistant from Google next year and an eyes-off self-driving system in 2028 that the automaker says can largely control the vehicle without any human interaction or monitoring. Now, GM says the autonomous driving system will debut on the Cadillac Escalade IQ electric SUV in 2028, starting on highways, then adding urban roads. That's what's happening here in the United States. Back to you in Mumbai.
Okay, thank you so much for that. But on that note, we're going to step into a very short break. We'll get to what's happening in the world of commodities after the break. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now, let's go across to Manisha Gupta, who's joining in to tell us the updates in the world of commodity this morning. Good morning, Manisha.
Morning, Vinny, and thank you for that. I'll start with the crude oil prices, where we're looking at stronger gains coming in. Prices are definitely off its 5-month lows, 2% of gains right now. Overnight has been another 2% of a jump up that we have seen. Well, with the European Union imposing fresh sanctions on Russia, shadow fleet of tankers, even LNG imports for that matter, you also have similar statement from US, which has announced sanctions on various Russian companies there. Is something that seems to be supporting markets. Until now, we haven't seen a supply disruption, but the market's still working out with numbers there. In the meanwhile, you also have seen a decline in the U.S. inventories. Markets were anticipating a 2.2 million barrels of a jump. Instead, you have a 1 million barrel of a decline. That seems to be supporting markets as well. What is not supported is the precious metal prices. After that very strong run-up that we've seen in many, many months now, this is huge profit-taking coming in for the gold and silver prices for a third straight day now. Gold prices have declined 6% from its record highs. It still is up 55% for the year, by the way. The markets are watching out for any potential U.S. and China trade deal, and that perhaps would take away the safe haven buying, and that money perhaps could rotate back into equities and the base metal prices. You have to keep an eye on aluminum because that is surged quite strongly, is trading at a 3-year high. So some support coming in for energy and base metals as of today.
Okay, Manisha, thank you so much for that. Keeping an eye out on what will be happening in the world of commodities through the day as well. But let's move on and to some national updates. Delhi's air quality continues to remain in a very poor category even 2 days after Diwali. The Delhi's 24-hour average AQI on Diwali day stood at 345, the highest Diwali day recording since 2021, when it had reached 382. After a gap of 5 years, the Supreme Court had allowed bursting grain crackers, which release 30% less particulate matter than conventional crackers, from 6 a.m. to 7 a.m. and 8 p.m. to 10 p.m. on October 19th and October 20th, respectively. However, crackers were burst till past midnight, with people opting for conventional ones due to easy availability. And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18, with the Nifty implied open indicating a gap-up start for the Indian markets. Don't go anywhere. Up next, your Bazaar Morning Call to take you through all that action.